Hey there, this is Luis Moreno. I'm with Simply Health Insurance. I've got a question that gets asked quite a bit from agents and from insureds. My spouse has a plan at work and we do not want to jump on his plan because it's too expensive. What can I do? So this is a dilemma. This is a tough one to handle, and this is usually the way that I handle it. Okay, number one, technically, if they have access to group insurance, they can get on a plan. If it's the right time of the year, they can get a plan on the marketplace. But if that plan that the spouse has at work is deemed affordable, and we'll talk about that here in a minute, okay, they cannot get subsidy for that marketplace plan. Okay, so I'll break it down. So number one, there's a percentage, 9.87%. Okay, so let's just round up to 10%. So if the premium that the employee is paying for that group plan is less than 10% of the household income, then that plan is deemed affordable, so you cannot get assistance from the marketplace on the plan that the spouse and the kids want to get on. Okay, so typically, and I've yet to find a scenario where this is the case, typically you're not going to exceed that 10% threshold. So here are your options. Option number one is they get on a marketplace plan. You find one that is, if you can find first the exception to get them in, or if it's during open enrollment, you get them in. If you're able to do that, then they can choose a plan without the assistance. Number two, you give them some alternatives. Here are the two alternatives that I use. Number one is you build out a short-term plan for them. You can use either United Healthcare, Golden Rule, their short-term options. You can use Pivot Health, which is backed by Allied Health, or you can use IHC. Okay, all three of those are short-term plans. So you can use either one of those three and build out a package for them. Okay, you're going to have to choose the deductible, co-insurance, out-of-pocket maximum. Typically, you may or may not get a few copays in there. They're not going to cover prescriptions, and it's going to be a fully underwritten plan, which means they're not going to cover any pre-existing conditions. Okay, and then you build out on that plan. You can add a hospital indemnity, you can add a cancer plan, and so you can round it out for them. Okay, the second option, and this one is one that I offer, one that if you agents want to get with me, it's called Medicare. It's a Christian-based health sharing of the medical bills. The biggest thing here is that it is not insurance. It's also fully underwritten. Okay, now I'm on that plan, and just to give you an idea, my ACA plan, well, first of all, my group plan through my company that I work for is almost $2,000 a month. If I were to jump on an ACA plan, an Obamacare plan, on the marketplace, I'm almost at $1,700. So I decided, and a short-term plan was somewhere in the ballpark, but then I decided to jump on Medicare. My premiums are a little over $500. My household portion, which is the maximum that my household will pay for all medical bills, is, I believe it's $5,200 for the entire year. After the $5,200, then it covers 100% after that. Okay, but the key thing there, it's not insurance. So for some people, they can grasp that, and for those that can, and those that are healthy and can qualify to get into a Medicare plan, I think that is a great option. So for you agents out there, if you're considering some alternatives for some insureds, number one, Medicare. The alternative is going to be healthcare.gov, an Obamacare plan, marketplace plan. Those are all the same terms used interchangeably. It's too expensive, or maybe they can't even get in because it's not the right time of the year and they don't have a special election. Okay, a short-term plan is too expensive for them, and so the third alternative is going to be a Medicare plan, and that's usually I do put quite a few insureds in there. So if you want to discuss that, get with me. Hit me on a direct message here on Facebook. Send me an email, and I'll be glad to share more information for you on that one. So I'm going to recap, okay? So if they have a group plan or they elect not to get in a group plan, remember, the key word is do they have access to group insurance? And if they do, they're not supposed to get assistance. Okay, subsidy, premium assistance, cost sharing reductions, all that is not supposed to happen. What's the worst thing that can happen? Well, if they do get it, when they file their taxes, it could come back to bite them in the butt. Okay, at tax time is when all this gets finalized, and if it's known somehow that they have access to a group plan, they could have to pay all those subsidies back in the form of a tax liability. So we definitely don't want that happening to our insureds. So ACA is one option. Then we have the short-term plan, short-term health plans with, I use 3 carriers, United Healthcare one, I use Pivot Health, and I use IHC. And then the other alternative is Medicare. And I tell you what, when I talk to my insureds, I give all 3 of them give them the options, and I let them decide. So hope this helps you. If you have any questions, again, hit me up. Hit me a direct message on Messenger through the Facebook app, or send me a private email, or if you guys are teamed up with us, you can call me on my cell. Thank you.